What's up, you guys? Nick here. Well, here we are at the face of yet another NIO Stock Dilution. If you have been following my channel for a while now, you would have maybe seen my video on October 26th warning of a likely incoming share dilution. I said that there could be up to 16% further dilution, and here we are. Another dilution. I will have an update to this video in the coming days to discuss if further dilutions can occur and long-term moves, but I wanted to get this one out as quick as possible and my current thoughts on this. I want to preface this entire video by stating that this was to be predicted. We have seen other dilutions this week within the Chinese electric vehicle industry, notably Li Auto and XPeng, and now, in response, NIO follows suit. What does this mean for shareholders moving forward? What does it mean for short and long-term share prices? Why was this done in the first place? And should you harness this opportunity or sell your shares and run? We have a lot to get to. But first, Webull has increased their promo. They are now offering 4 free stocks worth up to $3,700. When you 1. Sign up, 2. Open an account, and 3. Deposit in at least $100 using the link in my description. They are a 0% trading platform with some of the best analytics in the game. I use this app every single day, guys. It's really awesome. Make sure you hit that subscribe button. I will have a full update video really highlighting and analyzing my deep thoughts on this issue. There's more to come on this. Hit the like button for the YouTube algorithm. I'd really appreciate it. This is a great community here, guys and gals. Hit me up in the comments. Let's have a discussion about this. Alright, quick overview. A share dilution can be understood easily through an analogy. Let's use something we're all familiar with. Money. As governments print more money, there's more money on the market. Inflation goes up and the value of each dollar goes down. Supply meets demand. Every single one of our pre-existing dollars loses value. That's why a dollar in 1920 was much more valuable than a dollar in 2020. There were less of them available than there are now. The same thing is happening during a share dilution. All pre-existing shares are valued at less than they were when the same market cap covered a smaller amount of shares. The market cap hasn't altered, but the float has. If the market cap hasn't changed, then the value of the shares has. The shares are losing value. This is what a dilution is. So getting into the actual dilution itself, we can see that there is a proposed offering of 60 million American depository shares, each representing one Class A ordinary share, with the underwriters having a 30-day option of up to an additional 9 million shares. It should be noted that these are the same underwriters that were acting on their previous share dilutions. The usual suspects: Morgan Stanley, China International Capital Corporation, Hong Kong Securities. You may remember on August 27th, NIO announced a proposed offering of 75 million ADS. As always, shares plummet upon share dilution news, and well, that's exactly what they did, following what always happens to a T. Shares fell from 2044 to 1850, around a 9% decline. Now, the pricing of this previous share dilution was then released 4 days later, where they had actually increased the dilution even further to 88.5 million shares and granting the underwriters 13.275 million additional shares. These were purchased at $17 per ADS. What I remember finding funny is that shares didn't even react negatively to this news, and instead actually rose. I remember being shocked that as NIO had just announced an even harsher dilution for a lower share price than what was on the board, shares could be rising. These were times when the EV industry was completely offline from reality, being forced up due to huge investor interest. It should also be noted that a few days later, NIO shares went on a 4-day decline, honing into what the ADSs were actually purchased at, almost hitting the 17 on the nose. In the days following a dilution, shares will typically do this and hover around the price they were actually purchased at, as that sort of sets the new benchmark, so to speak. Now remember, NIO actually increased the share dilution in between the original announcement of the dilution and the pricing. That took 4 days last time. So watch out for fluctuations on Monday or Tuesday when this is likely going to be released. Make sure to subscribe, as I will have an update on the day it is released. Remember, NIO is essentially two counterparts to its overall model. NIO ADR, the American holding group, which Li Bin, NIO management, and investors are all exposed to. On the other side, you have NIO China, the Chinese government essentially. NIO ADR sold 24.1% of the company's stake to NIO China in October 2019 in what could be termed somewhat of a bailout, when they were next to bankruptcy, to sort of keep the ship afloat. NIO China is owned and operated by local authorities and the Chinese government based in Hefei Province, China. NIO ADR is obliged to pay NIO China $600 million through a series of ongoing tranches. They have thus far processed 2 tranches back to NIO China at $182 million each, totaling 364 million paid and 236 million remaining to be paid. Remember that when NIO ADR purchases back equity stake from NIO China in these series of tranches, they are gaining exposure to an increasingly larger portion of the company. This is good news for Li Bin, the CEO, management, and for all shareholders. Every time NIO ADR purchases back stake, our shares are instantly worth more than they had previously been, as we are becoming exposed to a larger stake in the company's overall profits. We lose value through share dilutions, and we gain value through purchasing back the company from NIO China. Do they balance each other out completely? No. Does it help? Yes. Now, how much of the company will ADR buy back remains to be determined. They likely won't purchase back the entire company, and you know what? Sometimes it's okay to have some form of government backing. Many companies actually do this. You'd probably be surprised to learn of how many companies have some form of government backing, even in North America and Europe. Now, why is NIO performing these share dilutions? Well, in short, to gain short-term capital. With a falling share price the past few months comes a falling market cap. However, as I stated before, this was going to happen one way or another. They are a startup company, and this is what startup companies do for short-term capital. Short-term pain, long-term gain. They state that they are going to use this capital for research and development of new products and generations of autonomous driving, sales and service network expansion and market penetration, and general corporate purposes. This was basically an insert vague and soft serve statement here line. Xpeng essentially released the same statement just a few days ago. This is standard practice within growth company share dilution press releases. NIO does indeed need capital to expand into Europe, as they have stated that they have their eyes on Copenhagen, Denmark for 2021. This requires vast amounts of funding for marketing, building infrastructure in terms of swapping stations, facilities, shipping their products there, building showrooms, hiring staff. This all costs a fortune, and NIO is doing what it has to do. They are also increasing their autonomous driving capabilities with this funding, which will be an ongoing venture for them, I do believe. They have plans to release L4 autonomous driving, which I do think is going to be unveiled at NIO Day. And lastly, they are using this capital, for lack of a better term, to stay afloat for the short and medium term. NIO's hands are essentially tied. As investors, we should be aware of how hard it is to break into the automotive industry, especially being an electric vehicle company. Vast amounts of funding and liquidity are needed on an ongoing basis. They could either not do this and your shares could be nice and pretty, not diluted. However, they would probably go bankrupt and your nice full shares would then be worthless. Or they could dilute them down, gain capital, make moves, expand and grow, and hopefully your shares will likely grow back to their original worth over time as the company hopefully grows and succeeds. Hopefully. That's the key word there. Now, if you believe in the long-term viability of this company, these shares have essentially become increasingly affordable. Sales, one might say. I, for one, am using this opportunity to buy more shares, and I know you won't all agree with me on that, and that's fine. However, my average cost is still very low, and I do believe in the long-term success of this company. I would not be surprised to see these shares inch their way back up, leading up to and following NIO Day. I bought shares the past few dilutions. It's all worked out well for me. There are huge announcements slated for NIO Day, and I do think the company strategically placed this dilution in front of that day, so it will hopefully be overshadowed in a week or two. And you know what? I think they're right. Investors' memories are short. Investors didn't seem to even care or even want to talk about the previous dilution in August, even a few days later, and we're just back up to purchasing more shares. That's the electric vehicle industry for you. I also want to make it clear that there will almost 100% be more share dilutions coming. There are an additional 70 million additional shares that could be converted by 2024, which have the ability to further dilute. This will likely happen sooner, and between Tencent's convertible bonds, Li Bin himself, and the Hefei government, more dilutions will occur. However, I will keep you all updated, all in the know, and all prepared for the coming steps. I hope you learned something from this video. Make sure you hit the subscribe button. You don't want to miss any of my future updates. Hit the like button. Don't forget about the Webull promo. This ends really soon. 4 free stocks worth up to $3,700 when you sign up, open an account, and then deposit in $100 using the link in my description. This is a no-brainer, guys. You can sell the stocks if you don't want them. It's incredible. They are a 0% commission trading platform. I really love them. I wouldn't preach anything I didn't. Anyways, guys, thank you so much for watching. Thank you for the continued support. I love this community. Let me know in the comments what you think about this. What are you doing about it? Anyways, take care. See you in the next video. Cheers.